Hi, folks. Lee Gettess here with the Market Sense for the week of December 17th. This is probably our last update of the year. Uh, Trade Navigator provides the charts that we look at all day long, and the first chart we're going to look at is a weekly bond market here. And you can see they got kind of quiet last week, and they're getting quieter this week. That makes perfectly good sense because everybody's waiting to see what the Fed will do Wednesday afternoon. I don't think the Fed will do anything, but if they change a syllable in their statement, it might be meaningful. So that's what they'll be focused on. They've kind of gone from support down here around 129.04 up here to the 129.28 area. Those are the two levels that mean something to us anyway. And it's very likely that they'll break out one way or the other, if not both, after the statement's read Wednesday afternoon. The next level we have is down here at the previous swing low around 128, or up here at the upper moving average around 130.24. Neither of those have to be limitations to how far they can go, and they also don't have to go that far. I mean, I think this big sell-off going back here from the middle of the year down, and now they've pretty much priced in everything. They know the Fed's going to taper at some point, and I'm not sure that they really have their mind made up to do much of anything. So we might get a little extra volatility. It doesn't have to be a directional move, so not a real clear idea of what type of position should be taken there. And stocks aren't a whole heck of a lot better. Stocks have finally broken down a little bit. And I wanted to show you this as we usually look at the day session S&P, but we're going to look at the 24-hour E-mini market, which of course is really the one we trade. And you can see that this happened Sunday night. They got down here to the 1754 area, and you can see that coincides with this projected low awfully nicely. And they've turned back up from here. Now that probably means that they're going up here above 1800 again to 1805 level. Probably, but not necessarily. Clearly, they've come up here and they've stalled without getting to the 1790 area, which is this middle moving average here. And they seem to be struggling a little bit, having a little trouble. So, maybe the Fed will have something in their statement that jolts them up, or maybe just the fact that we get through the Fed statement without scaring them is enough to get them to go up. If not, they could be in a little trouble. Heck, going down here to the mid-Keltner channel in the 1720 area certainly wouldn't shock anyone. And at some point, they're going to break that. As you can see, going back here for a long, long time, that middle Keltner band has held the move going up. They're not going to go up forever. I know that seems unbelievable while the Fed's pumping money into the market, but they're not. They may go up for the rest of the year, though, and that's kind of what we're looking at here, that's a very good possibility. So that's what we've got for you today. I don't know if you'll be able to find anything profitable to get yourself into for the rest of the year, but at the very least, try to avoid trouble. Have a safe holiday and a happy new year, and we'll try to go get them again in 2014.